Welcome to Real Estate Hustlers podcast. I'm your host, Josh Appleman. Today we are joined with Andy Crawford. Andy's a sales executive and real estate investor with 19 years in leadership, managing over $100 million, $180 million plus in sales. Founder of BCC Property Holdings and director at Prosper Capital, overseeing 250 plus units, focused on growth, profitability, and lasting partnerships. Andy, we appreciate you coming on the show today. If you could let the listeners know a little bit more about yourself.
Sure. Yeah, Josh, thanks for having me. I appreciate you. Yeah, born and raised here in Northern Kentucky, Cincinnati area. Been in pharma most of my life. As you mentioned, about 19 years in sales and distribution, about 25 years total. Grew up on a farm in rural Kentucky, and got into real estate with my wife, founding our small little holdings company, BCC Property. Really started out like most do, buying single family homes, trying to figure out a way to increase additional streams of income. Always had the itch, didn't really take much action until we had our third child, third of four. So just added more on our plate. But, we're really action oriented type of people. And back in 2019, we started to look into buying single family rentals and basically got into it really quickly. Built a small portfolio, started buying some small apartment buildings, 6 unit, a 20 unit. And then we finally realized, you run out of two things, time and money. So that really fast forwarded us into where I'm today and a current partnership as Director of Investor Relations and Principal at Prosper Capital.
Very cool. So when you were starting to buy houses, were you doing flips? Were you just buying steady houses to rent out? What was the play?
Yeah, it was real. I'm really a buy and hold guy. I'd buy properties, I'd renovate them. I'd hold them. We leased them ourselves. I actually bought a house off Craigslist in cash once.
Yeah.
So anywhere you could find deals off market, that seemed to be our sweet spot. We really focused on the east side of Cincinnati where we lived. We kind of thought, if we've got little kids, we're going to manage leasing, we're going to do the renovations and manage, some of those ourselves. It needs to be within like 10 minutes of our personal residence. So I think we did a pretty good job focusing on where, and this has been a pretty solid market for us. And as of today, we're actually selling some of those off. So we're starting to kind of pivot out of that completely right now.
Yeah, that's the fun part. You get to go full cycle, either sell, refinance, or both at the same time.
Yeah.
When you got into starting to buy, how did you learn how to do it? How did you learn how to go get financing, how to build the budgets, how to renovate? What was your steps, your play?
Great question, man. I tell you, I did join Greater Real Estate Investor Association of Cincinnati, so the RIA, local RIA. Just tried to learn more about like, okay, what do you do when you buy, your first home? And I think that group's really good for those that don't know what they're doing, don't have any experience. I personally have always been a handy person. I've renovated a few personal homes with myself. So that piece of the business I felt good about, but the financial, how you source deals, how do you negotiate, how do you line up financing? I think a lot of that I got to attribute to the local RIA and starting to interact with some of the people there that really help out first-time investors.
Yeah.
So.
Yeah, that's huge. And it's awesome when you can also be a contributor. Once you learn it, you do your deals and you start learning from action, then you can help others go along the way as well.
Yeah.
How many houses did you have when you decided that it wasn't one-offs weren't enough?
We got to house number 3, and then we figured, that was basically it. Once the third one came, we had to move on.
Just too much commotion, or what was like the pivotal moment?
Yeah, well, the biggest thing was when lease ups would happen. So when we would transition out to have a new tenant come in, we'd have to go in and, clean the property back up. And, you have that vacancy, which means you have no income coming in whatsoever. And that's what really set us into saying, okay, we got to figure out a better way in order to, mitigate risk. And that's when we went directly into a 6-unit apartment building. And that first apartment building that we bought, that small multi, that's when the light bulb went off immediately. And we immediately started to see this makes so much more sense. You got one roof, you got a few water heaters, you got mechanicals under one roof, and it just really just said, this is the way to scale. So
What So when you found your first multifamily, what were your steps? How did you finance it? How did you know what the business
Mhm.
plan was? Because there's always, you don't know what you don't know.
Yeah, no, spot on. I had a little bit of analysis paralysis. I was underwriting deals like crazy, I felt like I was putting in so many offers and not really getting anywhere. And that really deflates you a little bit because, when you're buying a single family, you go in, if you're direct to seller, you're getting that deal done, you're closing, you're going right into renovations. And I felt like it took me a good, 8 to 10 months to really figure out how to get a little momentum and try to look for the right market and the right deals. And that's really kind of how, we learn more in that business of, okay, what are we looking for? What is a cap rate? What do we need to offer these people? It was back in 2021. So, the market back then was starting to gain a little bit of momentum, even outside of COVID in Cincinnati. So we were able to, compete with an offer right around then and pick up our first 6 units. So, I got to give a little bit of credit back to the RIA where I learned to underwrite. Mark Hutton there did a great job teaching, the apartment focus group, which I learned a lot about underwriting in, and figuring out, hey, how do you factor in costs for, what happens to taxes, right? The simplest thing like that, if you're not doing a drop down entity, how do you factor in for increased taxes or for when reassessment happens?
Yeah.
How do you factor in water? And do you really know the true utilities? A seller's trailing 6 or trailing 12 doesn't always tell you the full picture sometimes, as you probably know. So,
Yeah.
a lot
Being
learned.
be able to engineer your own set of financials based off really what industry says that the financials should be versus what you're being told. There's there's back of the napkin, and then there's really thorough underwriting, making sure a deal actually works and pencils out. Um, Tax reassessments, that's huge. I mean, if
Mhm.
you're if you're not doing a drop and swap, then you need to figure out what the play is there.
Yeah.
I'm learning about the nonprofit entities, so that's a whole nother deal in itself. It's
Yeah,
a
I bet.
smart one. It's just there's so many different strategies to play off of, and it's just learning the pieces of the game and leveling
Mhm.
up.
Yeah.
And
Yeah.
there's always somebody that's way far ahead.
That's the glory of real estate, right? You think you know it all until you don't.
Yeah, and then there's a whole another level, and then you level up, and it's like, wow, if I was doing this 10 years ago, what would that look like?
Yeah.
So that's
Yeah.
that's getting in the right rooms, it's getting around the right people, and then ultimately just making plays.
Sure
Um,
is.
so how did your journey? How did you land into Prosper Capital? Tell us about how that
Sure.
came about.
Sure. Yeah. Well, I think it's right after, right around the 20 unit. We brought on that 20 unit, and we figured, we're going to run out. As I said before, we're going to run out of time and run out of capital. And I also, transparently was an LP, so I was also, partnering with other operators as a passive investor. Did a couple deals in self storage, small apartments, and you start to get to know people within the Cincinnati market, the operators, those that are syndicating. But my wife and I actually were looking at, trying to get another building, and that's when we came across paths with DJ Hume, who's the managing principal at Prosper. Funny enough, we were going after the same deal, and he brought it to me maybe a day or two after my broker did. Said, "Hey, man, I got this really great property under contract in Milford." And I said, "You're not going to believe this, but my broker brought this to me. My wife and I were actually considering this, but we've ran out of capital basically, and we don't have enough bandwidth." So I ended up partnering with him as an LP in that deal, and then just trying to getting to know him and watching his operations as he managed everything himself. And slowly but surely, he brought another deal. And he says, "Hey, would you be interested, passively investing?" And I said, "Well, I'm more of an active guy." I said, "But I tell you what I'll do." I said, "I'll start bringing some capital to the table." Said I've got about 20 years of sales experience. I said, "Let me align some capital for the next deal," and it was a property in Mount Lookout, and the rest is history. So we just kept doing a deal by deal basis, and I think we aligned really well. Kind of held a lot of the same values and work ethic, which is absolutely paramount when you're doing a partnership. So it was kind of a nice slow road to a partnership where it wasn't overnight, and kind of getting to see how he's grown as a young man and building his business really aligned with me. So, and that's when I decided, a few years back to kind of pivot completely out of being an active investor with my own portfolio and helping build Prosper and managing all of the investor relations and all the capital raising. So
That's huge. It's hard to find partners that you can click with,
yeah,
and do business with, and keep doing business with, and um, but once you do, I mean, it's a great piece. It really works out well for everybody, and you can grow substantially. What how big was Prosper Capital when you all joined forces, and then how much have you all grown?
yeah. I think back then he only probably had less than 100 doors under management at that time. Now I think fast forward today, he's brought on some of our other partner Jay Balker's portfolio, so we're closer to around 500 or so units. And we did last year alone, I think 4 transactions. Have another one lined up to close at the end of this month. So it's been really cool, to see the growth over the last few years. There was that lull that I think a lot of people experienced in 2023, early 2024. Not a lot of transactions going on, and we finally got one wrapped up. I think we only closed on one property in all of 2023, and in 2024 we had our best year yet. So it's been really exciting to see the growth and a little bit more of the momentum.
Yeah, and it gets more exciting. It's not so much on the closing, but it's on the reversion part, the refinance or the sale.
Yeah.
That's when you've met your business plan, and everything's come to fruition. That's
Yeah.
that's the fun part. Um, what are you all closing on here in 30 days or so, or less?
It's a small JV deal. Our buy box, I think, has drastically changed over the last probably year. We really try to do less of the smaller deals and try to move into the larger deals. But if a small one comes to us and
Yeah,
it makes sense, we're not going to push it away.
yeah,
I think you've seen a lot of operators in Cincinnati that have their own vertically aligned operations. Take those things into account. I know I've talked to some others that say, look, if it pencils out and it makes sense, I'm not going to pass up on a 24 unit or a 36 unit.
yeah,
So just a small JV deal that is. I think one of the things that we really look for is, where is it in relation to some of the other properties that we have, because we're mostly all scattered site. So if it's within quick driving distance, and it's an easy bolt onto our portfolio, and the numbers make sense, we'll pull the trigger on it.
yeah. I totally agree. The base hits is those are the small wins that get you there too. I mean, if you can pick up like you had mentioned, 24 unit, 48 unit. I mean,
Mhm.
it's hard to find deals. So if you can find something that works and it's get in, you all renovate as well. So you're full value
Yeah.
add. Yeah.
Yeah, we're full value add. I mean, we've done full redevelopment projects. Most of everything we buy has hair on it.
Yeah.
That's our business plan. We want to really do 2 things. If we can increase the value of the property by renovating it or by operations, that's really what we look to do. So
Yeah. I just spoke to a broker before we got off the phone. I told him exactly that. We like them nice and messed up when we get
yeah,
them.
you walk in, you say that smells like money to me, right?
Yeah, I mean, operations poorly managed. You don't see the rent being collected like it should, and it's just
Yeah.
that's it. You walk in, and you've got the typical just apartment units that need love.
And I
But
think too, it sets you a little bit apart from the competitors that maybe are looking for turnkey, maybe use a third party PM, and they don't want a heavy lift on their hands. So I think it gives you a little bit more autonomy too.
yeah,
When you're looking at those deals that might require a little bit more of a heavy lift.
yeah, we used to. We started out with a third party property management, and then we were forced to start to get into manage our own properties. And really, that force enabled us to even be tighter in operations, full control over all facets of the
Yeah.
business plan. Because if you're dealing with scattered sites, plus you're dealing with multiple entities on a scattered site, just the communication piece, it can break as far as
Mhm.
evictions, and then needing to push for more vacancies in order to renovate, in order to lease up higher. I mean, it's having full control over the entire process. It tightens up total operations, it makes things more
Mhm.
viable.
Yeah.
You all do the management as well, property management, construction. asset management.
Top to bottom. Yeah, top to bottom. And, that's one of the things I think that really attracted me to align with Prosper and DJ is just the fact that everything's in-house, management, asset management, construction management, property management. And, raising capital, you've got this tremendous pressure and responsibility. You're a fiduciary, you're to these investors' capital. You have to do what's right for them. And, it lets me sleep better at night knowing that we're leveraging others' capital, but we're wholeheartedly responsible for the success of these deals, right? We're not leaning on a third-party PM that may have more interest in making a profit off of turns and lease ups, right? The game. So it's another, I think, big advantage when you're aggregating capital from investors that you could speak to say, hey, look, we have a lot more control over the hold period than others that are using a third party PM, and that makes me feel more comfortable.
Yeah. What are some examples of ignorance tax that you've paid? Some learning lessons.
There's a lot. There's always a lot when you're growing. I could start all the way back to probably. When I first started out, in buying single family homes is just thinking you have more time than you do. And I'll go back to kind of why I'm here today and partnered with somebody in buying apartments versus buying single family homes is kind of the ignorance tax was I was getting up. I remember vividly, we were expecting our fourth child. And I wanted to rush to get this last renovation done on the single family home. And I was waking up at 5 a.m., going to the house, working on it, renovating it, coming home, taking a shower, taking the kids to school, working, putting the kids to bed after I get home and going back there till about midnight, 1 a.m. And I did that for weeks. And I tell you, that's a tax I won't ever forget that I paid, right? Is what is the real true value of your time, right? Yeah. That's one depreciating asset that everybody has. So I think that really allowed me to align with what's the highest and best use and what can I bring to maybe a partnership, or how can I realign my investing goals outside of just trying to think I can do everything on my own. Because that's the old world I lived in was you do it on your own and you can control it, you're going to have better outcomes. But unfortunately, it's pretty short-sighted.
Yeah, well, you have to get comfortable with having people do 80% of it. And you have a 20% pickup. So it's just, and that just means you put people in front of you that they're going to do 80% of what you expect. Mm-hmm. It's just what it is. And it gets diluted down every time they put somebody in front of them. It gets diluted. And then the message you have to reinforce the message. Where are we heading? What are we doing? Why are we here? Right. And that's part of like your morning stand-up calls, just making sure everything's heading in the right direction. So what's the future look like for Prosper Capital? What's on the horizon?
Yeah, I'm really excited about it. I think, big future for us and continue to grow the portfolio. Last year, it was an exciting year. Obviously, we closed on 4 different assets. And we also, I think more importantly, brought in a new partner, which is Jay Balker from Compounding Capital Group, CCG. Okay, yeah. And, Jay's a pretty known investor here in the Cincinnati market. He was a IT executive that turned full-time real estate investor. Started out, just like many of us, just getting right into it. His story is unique in the fact that he went straight into, commercial multifamily and skipped the whole single family route. Great guy. I think he brings a lot of strong skills that, align with both DJ and I. And I think that's really what's exciting for our continued growth is he's got a really great work ethic. And I think the three of us, as we continue to grow, prosper in the coming years, what's, I think, our short-term focus is bringing on properties that can command on-site management. Looking at assets in our buy box that might be a lot larger than we're used to. Probably like most that you're hearing, newer vintage properties. We love stuff with the hair on it, but we're also looking at bringing in additional investor capital, and a lot of what's on their want list and their check boxes. Newer vintage properties. So I think that's going to be something that we aim for in the coming months and year as well. Properties
are hard to find now. They're hard to find at a price that makes sense today, but could make sense 10 years from now.
Yeah.
It's especially in Cincinnati. Cincinnati market's It's a steady Betty market. A lot of eyes are on Cincinnati from outside too.
Yes. Yeah. It's a steady Eddie market, not very sexy market. There's not a lot of new development in this market as well. As you know, a lot of people are, buying and doing the renovation value add model that we are, which I think leads us to identifying some other, like markets within the tri-state area. So I think that's another piece of our growth plan for the coming year, as well as, Cincinnati's great. We love Cincinnati. We're not going to leave Cincinnati, but are there other markets like Columbus, Indianapolis, Northern Kentucky that makes sense for us?
Yeah. Yeah, we were doing quite a bit of traveling up to not India, Columbus last year, and then getting a property under contract here. So our focus was diverted, but that market is I mean, it's going nowhere but up. But there are a lot of traps. There's a lot of those one streets you don't want to buy
Mhm.
on, or little areas, just like
Yep.
any other city. But it's to be wary of. Just it looks good on the OM, the property, and then you drive through
Mhm.
the neighborhood, and you can't do it. You just
Yeah.
can't pull the trigger.
Yeah.
So, well, speaking of that, if you could give some advice to some beginning real estate investors on some of the lessons as far as what you look for on a new purchase.
Yeah. I guess, number one is there anything that you can do that increases the value of the property and increase cash flow, and really the one metric that we all really have under the microscope in commercial multifamily, which is the net operating income. How can you lower your OpEx? I think one of the things that we look for and we do really well at Prosper is, we can take a 55% OpEx ratio and knock it down to, high 30s or low 40s. So as a new investor, I'd say, hey, you know, the two levers that you can pull, can you decrease expenses and can you increase the income, right? It seems simple, but it's complicated executing that. I think something for new investors to really think about is back to time management, right? I call myself a W-2 investor. I have a full-time career. What do you really want out of your investing goals, right? What do you have? Do you want to have some additional income that helps you pay off, maybe your mortgage? I think you really have to align and identify first is, what do you want? What do you want out of your investing goals? And then align yourself with, an asset class in real estate that makes sense for you. Maybe it's not, commercial multifamily. Maybe it is single family that works for you, right? Maybe it's passive investing as an LP. I think a lot of the people that I talk to within the pharma industry, a lot of our investors are pharmacists, are physicians. They own, healthcare related businesses as well, and they love the idea of what real estate offers them, but they do not have the time, the energy, and able to be an active investor.
Yeah.
So I would just say define what you want out of it before you get into the nuts and bolts of putting out LOIs and trying to buy properties on your own.
Yeah, I think that's a people find success. They think the grass is greener, but they think that it's successful over there. But it's the consistency that the person's putting in and then showing up
Mhm.
every day. So people tend to start over and then start over and start over, and it just that builds up. So like you had said, get your foot into it, see what it's like,
Yeah.
and start there instead of just going all in and starting over. Just see what it's like first. That's smart. What books would you recommend?
I'll tell you, great real estate book. Everybody loves the Rich Dad Poor Dad. That's a staple, right? The Millionaire Real Estate Investor by Gary Keller is a great one. It's a really great roadmap. I'd say if you're new and you want to understand like why real estate and having a nice roadmap to understand, building partnerships, networking, making offers, really, growing your net worth and managing how you do that with, assets such as real estate. That's a great one. Non-real estate, I really have a great recommendation I listened to a few months ago, and that's it's How to Have Your Best Year Ever by Jim Rohn. That's a wonderful, more of a dissertation that's recorded. You can listen to on Audible, but he's got some really great insights that are almost very common sense insights, but a lot of great things to be able to continue to build and grow yourself as a professional. So
Yeah, that's I'm a Audible advocate as well. Just on the road, just whenever, just plug in and just retain. So yeah, it's good. Good, cool. If somebody wants to reach out to you, learn more about yourself, possibly invest along with you, how can they get a hold of you?
sure, they can reach out to me directly at andrew@prospercapitalco.com. Also, I'm very active on LinkedIn, so you can reach out to me on LinkedIn, which I think will be provided by you in the podcast as well. So, or if they want to call me directly, feel free to 859-816-6415. And then love to talk to anybody about investing in real estate, or if they just have questions, if they're new, get started out.
Cool. Well, I've certainly enjoyed watching your all's journey as well. So I'll continue following and we'll talk soon. Thank you.
All right. Thanks a lot, Jeff.